All right, welcome to Coffee with Markus, and we're back in my studio, as you can see. So today we're going to talk about, first of all, what's happening in the market so that you know what's going on. Then we will talk about the wheel strategy risks, because the wheel is a fascinating strategy, has a super high winning percentage, and there are some risks. And today we're going to talk about what happens if one of the stocks that you own tanks. What do you do then? Or what if the overall market tanks and you're getting assigned in all of your positions? What do you do? What can you do? And also, how can you prevent this from happening? We'll also talk about, since we're talking about positions, my positions. I'm showing you very specific examples for the wheel strategy risks. And also I'll show you the PowerX trades that I entered today. Plus, yes, I remember the small account. I've prepared this for you. And then we'll talk about anything you want. So, full fun show here today. Let's get started. This show is about real money and real trades. I'll show you the trading strategies that I personally trade, the tools that I use to trade my own accounts, and we will talk about the right mindset of a trader. Now, talking about mindset, I'm going to show you how to create SRC profits. And SRC stands for systematic, repeatable, and consistent, because that is the key to long-term success in the markets. So, if you are sick of all the hype and empty promises, and you want to learn trading strategies that actually work, then click on like right now and let's get started. All right, fantastic. Let's get started, and let's first talk about what's happening in the market. So let's switch over to the handy dandy iPad. Here we see the S&P 500, and we see that today the S&P 500 is up 0.5%, but it has been pretty choppy. If you're looking at it on the 5-minute chart, then you see that, okay, we opened lower, then quickly pushed higher into positive territory and have been diddling around here for most of the day. If you're looking at the other indices, for example, the NASDAQ, then we see the NASDAQ, on the other hand, opened lower and then up and away for pretty much all of the trading session here today. Looking at the Dow Jones, similar to the S&P, however, as you can see, the Dow never really pushed into positive territory, just for a moment, and now pushing lower. So what is happening? Why are the markets so undecided? Well, very simple. We are in earnings season. Earnings season is in full swing, and this is where we want to see of what is happening, not only what has happened in the last quarter, but what are companies expecting going forward, going into the fourth quarter? Our inflation costs are an issue. And we know that the PPI, the Producer Price Index, has been skyrocketing. I think it has been the highest in 7 years. We know that hourly wages are increasing. And we also know that there are supply chain issues. So we will see what happens. And this is where this week all eyes are on the guidance of the companies to see what we can expect. So just looking overall on a daily chart again, and looking at September and October, I'm going to switch off the volume here for a moment, because otherwise it gets a little bit too colorful. So we see here that September and October this year is September, and this year is October, have been pretty volatile, right? So this is where these 2 months have been living up to their reputation. September for being the worst performing months of the year, and true to that, and October of being usually the most volatile months of the year, and hey, true to this. So this is what's going on in the market. Well, as you know, I am trading two different strategies in these market conditions. I am trading the PowerX strategy, and we'll look at my current trades here, and then I'm also trading the wheel strategy. So these are the two strategies that I'm trading. Now, talking about the wheel strategy, see, the wheel strategy is super, super fascinating, and it can lull you in because it delivers super high winning percentage, and there are some risks. So let's talk about these right now. All right, when trading the wheel strategy, there are, of course, tremendous gains, and there are some risks. For example, what do you do if a stock that you own tanks and you can sell calls against it? Number two, what do you do if the overall market crashes and now you're stuck in 5 positions and you can sell calls against it? This is what we're going to talk about today, and I will show you 3 very specific examples, 3 of the trades that I am in right now, and then I'll also show you how to avoid getting in trouble if you can. All right, so let's get started and let's talk about, first of all, let's talk about the wheel strategy. And in order to do this, I'm bringing up JWN. So JWN Nordstrom, and if you're not familiar with the wheel strategy, here it is in a nutshell. Number one, you are selling put options and you're collecting premium. Number two, if the stock dips below the strike price of the option that you have sold, then you might get assigned. And what does this mean? It means that you have to buy shares at a certain price. And then number three, the idea here is that you are selling call options, collecting more premium until you're getting called away. And this is how the wheel is turning around. So that is here the main idea. Now, let me give you a very specific example. So here we're looking at JWN. And when JWN was going sideways like this, I did sell puts with a strike price of 30. And you see, shortly after I did it, I believe, on this day. So if you're zooming in a little bit, that you can see it better. I think I did it on this day. Let's just see if we can zoom in. And as you can see, after that, the stock has been dropping. And I got assigned at a strike price of 30. And at some point, we were trading at around maybe $26. So again, we will talk now about 3 scenarios. Number one, we will talk about what happens if the stock dips a little bit. And when I say dips a little bit, what do I mean by this? So I want to say at the time when I entered this trade, let me just see if I can hit it here. We were trading probably somewhere around $31. And as you can see, from the $31, we went as low as $26. So here we are talking about an 18.6%. So let's talk about a 20% drop. So let's say what happens if the stock drops around 20%. So this is something that can happen after you're getting assigned. And at this point, well, there's 2 things. If you can, well, let me just get rid of this here. There we go. If you can sell calls above the assigned price, then you should do this. So the assigned price here was 30. And so the idea was is to sell calls at a level of 30, or if you can, 31 or 32, and so on. So here's what I did. As we were dipping down here, see, at first, we were only dipping to around $29. And this is where there was enough premium to sell 30 calls. And this is where you're collecting more premium. At some point, you might be at a level where you cannot get enough premium for the 30 calls. And what do I mean by getting enough premium? Well, for me personally, I have a criteria that I want to make at least 30% annualized on the put or calls that I'm selling. So on any premium that I sell, I want to make 30% annualized. If it is less, I'm not willing to sell calls. And this is what can happen. Now, for you, it might be different. You see, there's many variations of the strategy. And for you, your plan might be different. This is why I have here the mug on my desk that says, follow your plan. So I'm just telling you my plan. And for my plan is that I will not sell any calls or puts if I'm not getting at least 30% annualized. So what do I do if the stock price is hovering at a level where I cannot get 30% annualized? Well, let me show you exactly what I do. In this moment, you have to sit on your hands. There's nothing for me to do until I see that the stock is coming back. So let's switch back here and moving towards my strike price, and I can get enough premium again. And this is exactly what I did here with JWN Nordstrom. So let me show you. Again, I told you I'll show you 3 examples. So this here is the first. So Nordstrom, I'm switching over to my account. I'm going on the annual activity, and we start looking here at Nordstrom. And as you can see, right now on the stock, I'm down around $1,800, and I have been able, by selling puts and calls, to collect a total of $10,000 in premium. So if I would close the trade right now, I would have $8,500. So obviously, this here is still a good scenario, because the stock, after I got assigned and after it was tanking, I've been able to sell calls multiple times. In fact, today I have been able to sell a $30 call, and I collected another $1,000. Well, to be exact, it was $990 that I collected in premium, and this contributed to the overall slightly more than $10,000 that I collected in premium here on JWN. So, first case scenario, what to do if the stock that you sold puts on tanks? Well, if it tanks around 20%, so let's say 15% to 20%, you should be able to sell calls, and you got to wait until it comes back to the strike price. So now let's talk about scenario number 2. I'll come back to you here. Scenario number 2, what happens if the stock dips more than these 20%? What if the stock tanks by 30%? So second scenario, and I want to show you again a very specific example. So here I want to show you LVS. So LVS, let's just switch over here to a weekly chart, and I'm zooming out a little bit. And you see, this is the weekly chart of LVS. And as you can see, Las Vegas Sands has been trading, what do I want to say here? Probably below between $50 and let's just say here. So this is a range of $50 to $70. And I believe it was back, let's just go here to a daily chart. I believe this was back in May when I saw that we were in a range trading here, and I sold puts. So I sold puts with a strike price of 58. Now, as you can see, after I did this, let's just zoom in so that you can see exactly what was happening here. So LVS, let me just get rid of this here for a moment that we can see it. So LVS kept dropping. And if you see, from a strike price of 58, LVS went as low as 36. Now let's use a handy dandy calculator to get an idea how much this drop is, because I just realized I'm not that good in drawing it here. So this is why we can use the handy dandy calculator. So we're talking about $22 that this stock dropped, and we divide it by 58. So this means a drop of 38%. So again, what do we do then when we have a 38%? And again, it's different for everybody. I urge you to follow your plan. I'm telling you right now my plan. Let's just have a sip here. Okay. So my plan, going back to the stock, is if I see it dropping by at least 30% from the assigned strike price. And let's do the math here. So if we're going for $58 times 0.7, so this would be a drop of 38%. So if it goes to around $40, so once it drops 30% and is around $40, I like to do something that I call flying a rescue mission. Now, flying a rescue mission is just a fancier name of the so-called DCA, the dollar cost averaging. So what does it mean? Well, I do not simply buy more shares, but I keep selling puts at a lower level, because the idea here is that I want to collect more premium, and if the stock keeps dropping, I will get assigned more shares. Now, when I'm flying the rescue missions, I do it in 1/3. What does this mean? Well, if, for example, in LVS, originally I would have sold 60 contracts, then I would do the rescue mission in another 20, 20, and 20. So what does this mean? Here in this particular example, I was actually looking for LVS to make a temporary bottom. which it did right here. So not exactly at around 40, but I want to say probably at around 38. When this happened, I was selling more puts at a level of 37. And again, only for 1/3 of my original size. So as you can see, it kept dropping below 37, and therefore I did get assigned additional shares. Now this is where the magic of dollar cost averaging comes in, and this way I have been able to lower my cost basis from originally $58 to $51.42. Now, as you can see right now, it is not enough to actually sell calls, but I have been able to sell more puts at these levels. So as I saw more support at 36 and 35, I have been selling more puts for, again, another third of my position, and I have not gotten yet assigned. So this is where I want to show you what exactly this looks like if you're looking here at the P&L. So here is LVS, and you see I collected a total of $7,175 in premium. Now, for the stock right now, I'm down $29,622. So if I would close this position right now, I would realize a loss of $22,000. And as you can see, this is where, what did we say earlier? How much did this drop? I believe, going back here to the chart, so need to calculate it again, $22 divided by 58. So this has dropped by 38%. So that, of course, is not good. So as the stock has dropped here, so again, the first scenario that we had with JWN, as long as we are dropping 15 to 20%, no problem. When we are dropping 30 to 40%, this is when I fly a rescue mission and I can sell more puts, collect premium, and I have to wait until it comes back up. So this is where I said if I would realize this loss right now, I would be setting at a loss of around $22,000, to be exact, $22,538. So keep in mind that the account that I'm trading is a larger account. And I know that recently there have been some discussions if I can call it a $250,000 account or a $500,000 account or $1 million account. So here's what happened. On January 11th, I opened an account with $250,000. I put $250,000 in this account. I opened a margin account. So on January 11th, that gave me a buying power of $500,000. So I've been calling it a $500,000. Is it a $500,000 account right now? Well, I realized some profits. There's some unrealized profits in there. So you call it whatever you want to do. I called it lovingly the $500,000 account, but you get the idea. I started with $250,000 in cash, used the buying power here, and this is what the account is. So I just wanted to put this in perspective. So if I realized a loss of $22,000 based on the original equity that I put in, it's probably what, around 8 or 9% of the original equity. So 2 scenarios, and I promise you that I will talk about 3 scenarios, and then we'll also talk about what happens if all of the positions are getting assigned. So the first scenario was down 15 to 20%. The second scenario was down 30 to 40%. Now let's talk about the third scenario. And the third scenario is if the stock keeps tanking. And so let's go back here and let's talk about the famous or infamous right trade. So let me show you what happened here. Again, we're zooming out. And this is where I told you that I entered this trade in February 2021. Sorry, February 2021, not 2020. Okay. So, and I told you this is where I violated my rules, and we'll talk about this. And I sold puts with a strike price of $21.50. And as you can see, right, at this point was probably trading around $24 and has been going down ever since. Right now, as of today, it is trading at around $5. So this means that right now, the the stock is down $19, and if we divide this by 24%, so this is a whopping 80%. So scenario 3, what do you do when the stock is down 80%? Well, first of all, it did not go down 80% right away. At first, we had scenario 1, where the stock went down 15 to 20%. So what do you do there? Sell calls, and this is what I've been doing. In the beginning, I was able to sell some calls on a ride and collect more premium. Now, then we had scenario 2, where we were going down around 30% to 40%. And this is where I have been flying rescue missions. Now, while flying these rescue missions, I have been able to lower my cost basis from originally $21.50 to $15.79, and right now, currently, my cost basis is at $12.86. However, this is where all good, but right, kept going down. And this is where we are now down, what, 80%? So, what can we do here right now? Well, again, everybody has a different plan, and you follow your plan. So in your plan, there might be, you might have stated, you know what, when I'm down a certain percentage on a stock, I'm cutting it loose. Following my plan, I'm looking at the fundamentals, and I still believe that Ride can sell trucks, and I believe it is a great truck for a fleet. However, right now, the stock price is not reflecting it. So let's talk about this. This is where an original short-term investment became a long-term investment, because I have been in this trade for quite a while, as you know, as you have been following me. So what can I do? Well, two possibilities. I can either right now liquidate all this and take a loss. But let's take a look at some numbers first. So if you're looking at Ride, so here we go. As you can see, right now on the stock, I'm down $119,150. And I've been able to collect $17,184 in premium. So this leaves me a net loss if I would liquidate this trade right now, if I would liquidate it of $102,000. So let's write this down, and let's go back here. So this is if the stock is down 80%. And again, originally, let's talk about this three scenarios first again. So scenario number 1, if the stock drops 15 to 20%, no big deal. Right now, if I would close JWN, I would still make a profit. Number 2, if the stock drops 30% to 40%, as it happened with LWS, I would realize a loss of right now $22,000, and $22,000 based on the original money that I put in would be around what? Now let's calculate it exactly so that nobody can get super upset if I say 8%, it is 9%. So $22,000 divided by 250, okay? So it is 8.8%. So let's just say this is where I would realize a loss of 9%. Now, scenario 3, this is when the stock is down 80%. And if I would sell right now, I would realize a loss of $102,000. And $102,000 based on the original $250,000 that I put in the account, $250,000 would be 40% down. Okay, so this would be nope. 40.8%, it's a 41% loss. So obviously, this is kind of ouch. And this is if I would sell this right now, which I'm not planning to do. So, okay, but where does this leave us from here? Okay, first of all, now you know that there are risks when you're trading the wheel strategy because the stock is going down. As long as the stock is just going down 15 to 20%, no big deal. If it is going down 30 to 40%, I would even say not a big deal. The ouch happens when the stock goes down 80%. So now the key question is, how can you avoid this? And this is where you might have heard me saying it before. Stock selection is key. And when it comes to stock selection, you want to grow for growth stocks. And what does growth stocks mean? Value stocks. I misspoke. I did this in another video and you corrected me, which I appreciate. So anyhow, this is where you want to make sure that you are having value stocks. What are value stocks? Value stocks, let's just actually take a look here at LVS. And I'm going to go to my iPad here. I will bring up Google Finance because I think it's a fantastic website. So let's just go to Google Finance and let's actually start with, let's take a look at JWN. So JWN, if we look at this stock and if we look at the financials and we look at the annual financials here. Now, obviously, 2020 was kind of an oops for many companies, including JWN. However, as you can see, the financial performance here, we see the revenue. So the revenue before 2020 has been slightly increasing. Nothing crazy like this, right? So slight increase. And we see that also the profits have been increasing. And this is a sign for a value stock, right? You grow the top line and you grow the bottom line and you do it slow and steadily. So let's take a look at LVS. So LVS, Las Vegas Sands, and we take a look at the annual data and we see, wow, actually, if you just look at the annual data, this is even looking better than JWN. Do you see the financial performance? Do you see how this 2016, 17, 18, even 19 has been slowly but steadily increasing? And so have the profits. See, solid profits here. So this is where overall looking good. For me, this is a sign of a value stock. Now let's take a look at Ride. And this is where you see where I made the mistake and what happened here. Because if we look at Ride, this is a SPAC company. And if you look at annual revenue, we see that there's no revenue because it's a startup, right? I mean, they have not yet produced the trucks and they have not sold any trucks. So therefore, what do we see here? There is absolutely no revenue, none, and a loss. So that's where we see quite a big loss. And so I should have never bought this company. I should have never traded it. I did, and I'm showing you this so that you can learn from my mistake. So I'm making here this mistake so that you can learn from it and make sure that you are not trading these stocks. Now, here's the cool thing. As you know, I'm using our software, the PowerX Optimizer. So if you go to the PowerX Optimizer and we are looking at certain stocks that are popping up here on the scanner right now. And for example, we look at a stock like Match Group. See what we did, what we built in here, so that you don't have to just blindly say, oh, okay, 152.50, this is a good put to sell, so let's just sell it. No. First of all, you want to always sell it at certain support, at solid support number. But the most important criteria is number one, do you want to own this stock? And you see, since I believe that Google Finance is great, we built in this little megaphone right here. And when you click on the megaphone, what it does, it brings you actually to this company. And so let's take a look at the company. Oh, this actually, all right. Here I picked a company which I believe is probably right in between value and growth stock. Because you see, we are growing, but the growth, if you see, we grow from 1 billion to 2 billion. So doubling in 4 years, it's not crazy. This is why I say it's probably right between here, a value and a growth stock. Solid profits here. So number one criteria, is this a company that I want to own? Yes. Do I want to own it at this price, 152.50? No, I do not want to own it at this price. Let's see if there's another one that just popped up. There's, for example, Tata Motors. No, let's actually see Tapestry. What is Tapestry doing? Don't know. Luxury goods. Let's take a quick look and let's see if this is a company. Okay, we want to switch back to annual here. There we go. Let me just switch to annual so that we see the revenue. And let me just use the markup here. And there you see, okay, pretty good, not bad. In 2020, the revenue was going down and they reported a loss. Well, 2020, that's what happened to many companies. But then 2021 seems that they're right back on track. So do I want to own the company? Yeah, why not? I mean, this looks like a solid growth company. Do I want to own it at this price? Let me just, oops, go back there. There we go. Okay. At 37, yeah, maybe. What you see recently, it's been kind of in a downtrend. So it could break out to the upside or it continue to the downtrend. Anyhow, so before we get too carried away. So number one, the wheel strategy is fascinating and you need to know the risk. Number two, what do you do if a stock falls? Well, three scenarios here. Number one, if it falls 15 to 20%, not a big deal. You should be able to get out of this with a profit. Number two, what happens if it drops 30 to 40%? Well, this is when you have to sit on your hands and wait if it comes back. If it doesn't, you might have to realize a loss, which might be anywhere between 8 to 10% of your account. Number three, if you pick the wrong company and it goes down, you are stuck in this position and now a short-term investment became a long-term investment. And now you got to see, does the company still have solid fundamentals so that it can eventually turn around? And with Lordstown Motors, I believe it does. Now, you might disagree, and that's fine. This is why follow your plan. So if you look at this company and say, nope, I don't believe in it, then you should actually get out of this stock. Only if you still believe that there's potential. And honestly, for me, if I'm looking at this stock and see that it's trading at $5, what is the upside potential and what is the downside potential? Well, the downside potential is it can go to zero. What is the upside potential? Can it go to $10, $12, $15? I believe it is possible based on what I see. And this is why I will keep holding on to Ride for now. However, if it does dip below $4, I have a very specific plan of what to do then. Anyhow, so hope that helps, that you understand the risks of the wheel strategy and you also understand how to minimize the risk. And keep in mind, when trading, there's always risk. You cannot eliminate the risk, but you can minimize the risk. And now you know whether the wheel strategy is something that you should be trading based on your risk tolerance, or if maybe a strategy where you have credit spreads, debit spreads, or something like this might be better suited. Hope this helps, and I'll see you in the next video. No, don't go anywhere. This is just for the editor so that we can cut this out so that people, because I get this question a lot, people ask me, okay, what if you are in a stock that tanks? And now you know. Okay, so let's actually take a look at all of your comments. And Mark Tuck said, are we starting soon? Yes, we were a little bit delayed. Sorry about this. I was still setting up the studio because, as you know, for the past 2 weeks, I've been with my mastermind in Clearwater Beach, Florida. We had a blast. It was fantastic. We were trading live together and had some fun stuff. And so I took all my cameras so that we were broadcasting from there. And now I've been setting up back here in my home studio. Anyhow, yes, we are getting started. Okay, so good to see everybody here. And okay, Nathan is living the dream by trading the wheel. That's good. Perfect. Okay. So Carl says, today I've learned that high volatility from upcoming earnings can be a great opportunity to sell covered calls on positions that I have been assigned. Yes. And please do not trade into earnings when selling puts. Okay. You don't want to sell puts that trade right into earnings here. Absolutely. Oh my gosh. Okay. Before I forget, not that it happens again, before we go to the questions, let me actually show you what happened here on the smaller account where I've been trading the PowerX strategy. I know that you have been waiting for it, and I almost forgot again. So this year I am trading, let me just see. How can I thought that it was easy here also to mark with my handy dandy notepad. Apparently it is not so, but there's always the possibility to hopefully do a quick screenshot. That worked. Okay, good. So it's not as pretty as always, but here you get the idea. Okay, so what do we have here? So these are the trades that I've taken, and you see this is the close date, and I've been taking these trades in the trade year account, so this is why the reporting here is different. So I also put some numbers on there because you see I'm typically, what I like to do here is split my exits. And again, this is here according to the PowerX strategy. So that's not the wheel, it's different. And it's a smaller account. So this here is an account where they can be paranoid about calling it $20,000 account. Okay, so originally I put $20,000 in this account and started trading it. And this is also a margin account. So meaning that I have $40,000 in buying power. This is when I opened the account. Okay, so there's one trade. This trade was a loss. There's a second trade, Max R, that was a loss. So loss, loss. There's a third trade, Plug, that was a loss. A fourth trade, Nicola, that was a loss. And you see here's the other part of the of this. Well, you see these are two together. These trades go together. Then we had OVV. OVV is these two trades together, and this was a win. So we had one win. NEM was an option, 2 wins, and there's CELH, a third win. So these were the third wins, and there's another one that is a loss. So total of 8 trades, and out of these 8 trades, we had 5 losses and 3 winning trades. So where do we stand here? This is where we look at the gain and loss. And as you can see, these 2 trades here, the first top 2 trades, SFIX and Nicola, I closed on October 1st. So if you want to count just what happened here in September, you see in the lower bottom right, I hope that you see it, there's a sum of $523.49. So these are the trades in September, $523.49. If we count these 2 trades, this is why I exported it until through today, we would have a loss of $100 because there's approximately $600. So in summary, 8 trades, 5 losing trades, 3 winning trades, and a loss of $100 if we are counting the October. Now, I am currently in a few trades here according to the PowerX strategy. And let's take a look at these trades here that I am in. And actually, we can do this now on the PowerX Analyzer because we now have live data on the PowerX Analyzer. So a trade that I entered last week was FN, there we go, FNGU. So we entered this with our mastermind. As you can see, we went long at $36.92. Right now, it is trading at $40.24. So this here is looking good as a trade. So this is FNGU. Then also last week, we entered LAC, and LAC, just so that you see, we entered at $25.80, and right now it is trading at $25.56. So it's down, what, 24 cents? Minus 24 cents per share. I traded, I believe it was 180 shares that I traded here because I like to trade even number of shares, not odd, even number of shares. And this is why I traded 180 here. So then we also, today, we had FTAY. FTAY today entered at 25.87. And as you can see, it is trading right now at 25.74. So down, what, 13 cents here per share, 280 shares traded. And then we also have NVIDIA today, which gave us an entry signal according to the PowerX strategy. And NVIDIA, as you can see, buy to open at 219.32, right now trading at 222.22 cents. So slightly up here. So this is good. Okay, so these are the current trades that I am in. And according to the wheel scanner, I entered one more trade, which was CWH. So I am, let me just show you, in CWH, sold the 36 put. So right here, the 36 put. And as you can see, this is going really well. I sold the 36 put on Friday. And right now we are trading at 38.43. So good here. All right, so now back to your questions, but this is one that I almost forgot. And before I forget, there you go. All right, so good to talk about everything here. Okay, so Junior says, my right plan was dumped. My right plan was dumped it at a loss and moved the money to LCID instead. Okay, this is where we go back to, right? You follow your plan. And for me right now, there's nothing to do unless it falls below 4. And what I'm considering is once it goes below 4, this is my current plan. I'm not saying that this is what I will do, but my current plan, subject to change, is that once it dips below, I will sell aggressively calls at 4 to collect some more premium and then get called away with a loss of $8.86 per share. Anyhow, so this is in a nutshell. Good to see everybody here. And Amanda, no, I'm not out of right. You'll be the first to know here. I mean, if you keep watching these videos, you know exactly of what is happening here. And I am still in right because if you look at it, so you see, take a look at this, right? So right recently, let me zoom in here a little bit. So right recently was moving higher, but still below my cost basis of $12.86. It's right up here. So it moved to around $9 and then pulled right back. And right now we are hovering around here. So, I mean, at this point, for me, it does not make sense to sell it. Again, might be different for you, and that's good for you. This is why you need to have your plan. Okay, good. So Timothy got right first assigned at 13.5 and the second at 6.5. Okay, so your cost base is probably much, much lower than my cost basis here. Okay. So Braden says, as long as you don't load up too much that you can handle a loss on assigned stocks, here's the deal. You should never, ever trade with money that you can't afford to lose. I can tell you this, if I would lose the whole account, if I would lose the whole $250,000, my lifestyle would not change. And this is where it's super important that you understand this. Sometimes people ask me, should I put all my life savings into a trading account? And I say, no, you shouldn't, right? I mean, you should have an active trading account. Then I'm also invested in real estate. And there's other ways where you can invest. Maybe you want to invest in dividend stocks or whatever it might be. So please only trade with money that you can afford to lose because there is risk in trading. Good point. Okay, Brain, I understand. This is why I don't like flying rescue missions. So what you could do, if you choose to, you can say, if it goes down 30%, I had one of these comments on a YouTube video recently where somebody said, yeah, if a stock goes down by 30%, I cut it loose. And that's okay. If that is your plan, make sure that you follow your plan. All right. Jason, yeah, I mean, the right challenge, talk me about. Do I like this trade? No, I hate it with a passion. Do I wish that I would not be in the trade? Yes. Do I wish that it turns around? Yes. And based on my due diligence, I believe that this is possible, and we shall see. Okay, so if you want to get a great example of selling puts and not being able to sell calls, try MVIS or pins. Yep. And you see, this is where it really depends. How much are they down? Scenario number 1, 15 to 20%. Scenario number 2, 30 to 40%. Scenario number 3, 80%. Really depends of how much they're down. Okay, so option trader is asking a great question. Are you afraid of getting assigned again with 3 assignments and 4 rescue missions? You have purchased around 425,000. Your account has only 500,000 buying power of stocks. Do you need to add more cash to the account? You see, at this point, here's the deal. So first of all, you're absolutely right. If I'm getting assigned another stock, then I would have to cut loose one of the 3 stocks that is right now tying up buying power. I mean, first of all, JWN is tying up $100,000 in buying power, and this would probably be the first that I sell because I would sell it as a profit, right? Because I collected a bunch of premium. So if I'm getting assigned, I can cut this one loose. Okay. I also have 1 1/3 positions in LVS, so around $130,000 in buying power. So there's always a possibility that you can put in more money, or what you could do is you cut loose some of the losses here. So we can only see part. Comments are chopped off. Oh, I'm so sorry. I thought that the comments are all visible. Okay, never mind. Let me just see. You can't see the whole comment here? All right, we'll figure this out for the next time. Anyhow, so the two possibilities, you can liquidate one of your existing positions, hence freeing up buying power. And this is what I'm planning to do first. And if needed, you can, if you want to, add more money to the account. But you see, so if I get assigned in CWH, in this case, I would probably cut loose JWN and this way, freeing up $100,000 in buying power. Does this help? Okay. Cool. Manuel says, how to compensate the time that you're idle to sit still to get the 30% annualized? Well, this is where you have other stocks, right, that you can trade at this point, or this is where you might not achieve your goal. And I've been showing you the monthly realized profits, and you have seen that some months I was not able to achieve my goal of 15,000. So we will see at the end of the year if I'm at 30% or 28% or 25% or wherever I will end up. I mean, right now it is October, mid-October, so we have another, 2.5 months. So we'll definitely tally it up and I will keep you posted. So Jason asked a great question. Rather than sitting on your hands, why not sell calls and make less than 30% annualized? It locks up your position. Exactly. And Jason, this could be your plan. If you're happy in taking small, if you say, you know what, I'd rather take something than nothing, that's absolutely fine. That's why I'm presenting my plan. And I'm not saying that this is absolutely, you have to trade this way. And if you never do it, you will never be successful. No, I mean, if you're comfortable taking less, please do it. I don't like to do it because it'll lock up my position, especially if then we have a quick retracement here. Anyhow. Good. So Marcel says, selling options does not pay long-term. Well, I mean, if you believe, well, so what do you do, Marcel? I'm just curious. Do you buy options? Do you buy stocks? What's your strategy? And again, I'm not saying that you have to trade it. This is why we did today's session, to make sure that, yeah, you know the risks, and then you can decide whether this is a strategy for you or a different strategy might be better here. Okay, good. What else do we have here? Let's see. Yeah, there's some great comments in response to Jason here. That's fantastic. And also in response to Sama. So that's good. Yeah, maybe one of these can say, you could actually lower it and sell shares not at your cost basis, but at your break even. And the difference is the cost basis is the prices that you bought the shares at. Dollar cost average down, right? And the cost and the break even is if you subtract the premium from there. And you're right. You can always get out of this if you choose to do so. Again, depends on your plan. All right. Good. So Onatsi, yeah, I thought Markus splitting the 1/3 amount. That is correct. So this is why we said a third. Cool. What else? How do we have here? OG1 Kenobi, thanks for all your transparency, help. Okay. Hey, feel free to watch or not. I mean, this is the deal. It's always so interesting. You might have seen it. Some people like to argue, and that's fine. And that is okay. This is where I say you don't need to watch the video or you don't need to trade the strategy. It's all good. I'm showing you what I do. I'm showing you the good, the bad, and the ugly. I'm showing you the positions that I'm trouble. I'm showing my losses. I'm not hiding the losses. I'm addressing them. I hope that you are doing much better than I do, that you are not making mistakes. And trust me, I've placed since, just this year alone, I've probably placed around 200 trades with the wheel strategy. And yes, one of them is pretty bad. The other two I think are okay. JWN, not too concerned about this at all. I'll probably get called away this week, and LVS, we'll see. Anyhow, so Justin, at what point will you take a loss on a trade? Justin, this really depends on you and your plan. So please have a plan that you are comfortable with the loss that you're taking. And some people said that they got out of right earlier. I think somebody said it here and put everything in LCID. That's great if you're out of this, right? I did not. I'm showing you what I'm doing. And so I am not doing anything or not planning to do anything unless we're going below $4 or obviously as we are going above $10. And until then, I'm just sitting on my hands here. Good. Junior says, right, a name that will live in infamy. Or it might be the phoenix from the ashes. We shall see. Time will tell. Okay, so Nathan said you can also roll. Yeah, you can roll, but I usually want to get assigned in the stocks. Again, I mean, out of the 200 plus trades that I did, most of them, when I got assigned, I was very, very happy to get assigned. In the beginning, I was even happy to get assigned in right. Now I'm not anymore. But you see, I'm okay with LVS. I'm okay with JWN. I'm okay if I'm getting signed in CWH. In fact, I have been assigned several times in CWH, and this has worked really, really, really well. I mean, just to show you, CWH, a trade where I collected a total of $12,590 in premium. And you see, if you look at the realized profits year to date, you'll see here that those where I got assigned, I was able to collect most in premium. GDXJ, I got assigned, collected $20,100 in premium. Right, I got assigned, $17,000 in premium. Penn, I got assigned, $15,000 in premium. CWH got assigned, $12,500 in premium. JWN got assigned, $10,000 in premium. Apps got assigned, $9,000 in premium. Win got assigned, $8,000 in premium. You get the idea. You get the idea. So in general, I really like getting assigned because this absolutely helps, because you can sell calls more aggressively than puts, and therefore you can make more than the 30% on the calls after you're getting assigned. Anyhow, good. So Ryan says, are we ever not in earnings season? Yes, we are. It's usually, earnings season is usually just 4 to 5 weeks. This is when the majority of companies are reporting, maybe 4 to 6 weeks. And then we have another 6 to 8 weeks where we are not in earnings season. All right. Good. What else? Let's see. So JJ says his full profit over time has dwarfed any loss. Just for the record, overall he's up. So I mean, total, just full transparency here. I mean, really, not a big deal. You have seen it. So I've realized $162,000 in profits, and right now with Ride, JWN, and LVS, I'm down. Unrealized profits are $150,000. So if I would liquidate everything right now, I would still be up $12,000. This is obviously not my goal and far away from my goal. And this is why I say I'm not planning to realize these unrealized losses just yet. Now, at the end of the year, it's a different story, because at the end of the year, as we come closer to taxes, this is where it might make sense to realize losses for tax reasons. But we have another 2.5 months until we can talk about this. All right. Anyhow, hey, this was a fun session. Hope that this was helpful for you so that you see of what's happening and what you need to do and what you need to be aware of when trading the wheel. I know that we didn't get to all of the comments. So if there are some comments that we didn't go in the live session, feel free to leave them below the video here as soon as it's finished. I'm pretty much caught up on comments. As I told you, I was out in Clearwater Beach in Florida for 2 weeks. Not been able to respond as actively to the comments, but I'll be happy to take a look at your comments. So hope this helps. I'll see you in the next video. Take care and have a great rest of your day.